A video on today's stock market session, and we're going to go over the move that we called last night and review how we got that exact move. And then we're going to talk about how we used about 10% of the original capital to make up losses on a previous trade. So let's get into that real quick. If you're interested in the stock market or learn how to trade stock options, like the video, subscribe to the channel. So yesterday I got into some XLF shorts. I lost about 150, closed it out for $150 loss on the day. Coming into today, we got the breakdown, but once it broke down, I didn't sell. So then we got an unexpected bounce into close. I'm not paying attention into close, and then the next day comes, you open higher, and I say I'm just gonna sell because I don't want to sit here and hold this position all day and then wait for FOMC to see if it's gonna stop me out. Same thing with SPY. Lost about 270 on that trade. The issue with SPY was I got in here, but I also had an automatic order that I had previously set to take the breakdown. So had I realized I had that order set, I would have canceled it because I didn't want to be shorting at the lows into close. That's just not something I do. So you bounce in the close, open high, and that's kind of how you get the losses for the day. But then you come to today and you see that you use $35 to get up to 95. So you make almost triple, right? You almost triple your money. So doing that twice alone made up for the XLF losses. XLF I had well over $1,000 on. SPX and SPY were $35 each. So I use $70 to make up losses from a well over $1,000 investment. And that's kind of how you got to play the game. So looking at last night's video, we talked about, I made a video yesterday, and then we talked about getting a bounce and then a pullback or flush. Then I said on the daily, you want to look at SPY to take those levels out and then fill the gap. Go back and watch the video. I gave details as well. Look at what happened today. You get the bounce and then you flush. So you can also see that this is the same stuff I'm telling the group this morning. And basically I'm explaining it like the psychology is that anyone who went long right there in the circle area, there is a circle area, for a bounce is going to cut the positions now that we back at or near break even once it gets up there, right? So that's where we were with it. I chose this. Here's my soft stop right there, 39.0675. I chose that as my soft stop because anybody who had, or when the Bulls tried to take it for a bounce, that's how high it went, and that's where the momentum got slapped down. So I'm saying I chose it as my soft stop, meaning that we would have to hold above that level and then maintain it, then not stop out. You see, we did not hold above 39.06 in no regard. Soft stop, because I know, as I got marked here, you can see I got multiple red levels marked. There were multiple bounce attempts, so I knew ES could try to push to those attempts, and it ultimately did and never reclaimed any of it. So everybody chose that as that to be the rejection point. And you can see the move down that you get. And honestly, had I caught this entire move, it would have been 300% easily on those contracts. Instead, we got 200%, which I'm very glad to have. But you see the kind of money you can make. So like I said, like the video, subscribe to the channel. Stocks are going down. We had FOMC today. Federal Reserve Chairman gave his statement. And maybe I'll do a video on that later. But for now, we'll throw this video in the playlist. This is probably one of the harder trading weeks. So it's that's why I chose this week to do this playlist day by day. So you can see how crazy stuff gets. See no price movement for 4 days and then a big dump. So hope you guys enjoy the content. Catch y'all later.